I'm going to just go over some quick disclaimers. The first disclaimer is that due to the live nature of webinars, everything presented today, the PPM will preside over. So we do our best to make sure everything is accurate, but things do happen. So make sure that before you invest, you review the PPM, you understand the risks. All investing carries risk, and do your diligence. So make sure that you understand what you're getting into and that you are comfortable with what you see today and in the legal documents at the time of subscription. Tarek, I'll let you take it from here and let's discuss why now is the optimal time to invest in Southern California.
Okay, all right. So if you guys take a look at this picture on the left, what does this remind you of? This is going to remind you of the exact houses that you see us buying, fixing, and flipping on HGTV. So in the Flipping El Musa's, Flip or Flop, the newest show, The Flip Off. And as you know, what we do is we scour Southern California looking for the absolute best off-market deals that we can buy under market, improve them, and sell them for a profit. Here's what's going on. I've learned a very, very, very valuable lesson over the last 20 years. And the lesson is this: the way to build wealth with real estate isn't to buy, fix, and flip it. It's to buy and hold it. Because when you're buying, fixing, and flipping, there's so much overhead, so much cost, and so much in taxes you have to pay, where I honestly probably could have stopped flipping houses after my first 100 houses, kept those as rentals, and today I might have been in a much better position. So this picture you're looking at on the top left, that is the actual property that we already bought. It's in Buena Park, California. And what we're going to do is pretty simple. Instead of fixing it and flipping it, we're going to fix it in a different way. This house, we're actually going to be tearing it down. It's on a prime lot in Buena Park, California, and we're going to be building 10 units. So instead of flipping, we're holding. And why do we want to hold? Well, over time, rents go up, prices go up, you get appreciation. And in Southern California, and we have a major housing crisis. So right now, housing is needed and there is so much demand. This is the best idea I could possibly think of in today's real estate market. And
let's do some introductions. So we've got Tarek El Musa. Tarek, let's talk about TEM Capital. Why did you start TEM Capital?
Great question, Kaylee. So, I'm a very passionate real estate investor. You guys know my story. By the way, I'm looking down here. I should be looking up here.
I keep looking down there.
You guys know my story. I graduated high school in the year 2000 and immediately started selling Cutco kitchen knives, lost my sales book. Then I got into delivering pizza. Then I got into real estate. And real estate showed me the way that life could be. And let me explain what that means. I never knew people like me had opportunity. I never knew people like me could buy real estate. I never knew people like me could flip 1,000+ houses. And then once I got into the world of real estate, I realized how powerful this business was. And by the way, we've been together almost 6 years now. By the way, our 6-year meeting anniversary is what, July 4th?
Oh my gosh, it's coming up. Yeah, our meet-iversary.
She goes 6 long years. That's what she said. I just say 6 years. She goes long years.
Says that. Don't believe him.
But, when it comes to real estate, she's always been a luxury high-end real estate agent, right? But today you flipped over 20 houses.
25, I think.
25. Mm-hmm. She owns investment properties, rental properties. She's developing. So 6 years ago, she wasn't an investor, and today she is. And I am so passionate about sharing my love for real estate that I started TEM Capital about seven years ago. And the reason I started it is because people would come up to me all the time on the streets and they'd be like, hey, Tarek, we saw your show. We want to flip houses with you. We want to do deals with you. And the truth is, I never really knew how to make it happen because I didn't need to bring in all this outside money to flip houses because I had my own systems in place. And then I was buying rental properties. I bought about 200 all over the country. But then I got to a point where, you know what? There are so many amazing deals out there. And I know there are so many people that want to partner with us. And that's where TEM Capital was born. So over the last 7 years, accredited investors all around the country have partnered with me to buy self-storage facilities, multifamily properties. We've been developing, but this is the very first time that we're talking about houses. And the reason we're talking about it now is because the opportunity right now is bigger than it's ever been. Like hands down, bigger than it's ever been, which we're going to share with you guys in a minute.
Awesome. Jared, I would like to introduce everyone today to our business partner, Jared Jones. He's with Middle Housing Partners. Jared, I'll let you take it away from here and introduce your team members and your experience.
For sure. Awesome. Yeah. So, I mean, much like Tarek, started out in real estate, a lot of flipping. We've not flipped as many homes as Tarek, but approaching 500 homes now. But we've done something a little bit different over the last few years, and we pivoted into taking advantage of a lot of the housing laws that have been created by the state. And so my partners, Brian and Ethan, work with me on a daily basis to use the housing laws created by the state using ADUs, SB9, which is duplex, and 10-unit development laws. And all of these laws have created opportunity for us to do over 600 units in the last few years of these small middle housing or workforce housing kind of product. And so that's what we've specialized in. And we've built the design team. We have in-house design and construction teams, as well as property management. So we have been employing this build to rent strategy over the last few years, and that's how we hooked up with the Almusas.
Yeah, and here's something very, very, very important, you guys. When you're partnering with TEM and HEM Capital, you are working with and leveraging decades of our work, our inner circle, because the truth is this: the reason we didn't start doing this years ago is because we couldn't figure out how to make the construction make sense. It was too darn expensive based on what we were doing to go into these properties, add square footage, build units. And that's where we got introduced to Jared and his business partners about 2 years ago through a mutual friend. And it turns out that they are absolute rock stars when it comes to construction. They have done this I want you to think about this, 600 times, you guys, 600 times. And you know what the beautiful thing is? They're able to do it at a cost that is half of what we would be paying. So I want you to think about that. We're getting it done at about half of what it would cost Heather and I. So like Jared, roughly ballpark it. What is your price per foot to build right now? Just ballpark.
Yeah, so somewhere in the $200 range.
Yeah, that's wild, you guys. If anyone's on right now and you got any bid for anything in the real estate world, you know building in Southern California is not in the $200 range. It's in the cheapest, the $400 range, up to the $1,200 a foot range. So not only are they rock stars at construction, they've been doing this so long, they know the exact layouts of the floor plans to maximize square footage and rents. They know how to build to get things approved faster. So we're going to be going over all of this stuff, but pretty much what I'm saying is we put together our inner circle rockstar team, and now this is your chance to leverage with us. And
Heather, you want to tell us a little bit about HEM Capital?
Well, HEM Capital
stands for Heather Almusa, which I'm Heather Almusa. Nice to meet you guys. Probably some of you might have met me, some of you haven't. So I started in luxury real estate and then started flipping houses with my husband about 4 years ago, would you say?
Wow,
3 years ago,
yeah.
4 years ago. So I brought a lot of my luxury real estate knowledge into our flips. So I learned how to flip houses on TV. Tarek taught me everything I knew about flipping houses, but I brought in the design aspect and brought in some luxury design to our flips. So I've really sourced designing our houses, but at a good cost. So that's kind of my thing. And I feel like I've really elevated the projects that we do. So I really like to be hands-on when it comes to the projects and hands-on with design especially. So I'll be helping out with this one to make sure everything looks pretty and cohesive.
Yeah, so Jared and I were talking, we're like, well, if we do this, we're not too sure everybody's going to want to rent what we create. So I know, no, I'm just kidding. It's true. But so, honestly, whatever it is we do, we always want it to stand out. We want it to be elevated. We want the tenants to appreciate the work we've done. We want them to stay in our properties. And that's where Heather shines. She knows the floor plans people want. She knows the color schemes. She knows the materials. Because at the end of the day, we are not putting out low-end product. We're creating housing for people that really, really need it. And we want to create housing that they really love and enjoy because, like, you know, we spent how much time do we spend on our flips, on our projects?
A long time. I mean, you know, you want to get in and get out, but you also want to make them nice. You want people to fall in love with where they live. And it was really important to me to, when I came into working with Tarek, was to really put my mark on things. And if I'm going to do something, I want to excel and do it 100%. So my name's going to be on something. It's really important to me that it looks luxury, but that's affordable as well. And this project's really exciting because it's in our hometown where both of us have a lot of stories here in Buena Park, and it's a really exciting project.
Yeah, and I'm excited to say that she looked at our first rendering, Jared, and she changed all the colors. So, you know, she's very passionate about this.
Sorry,
Well,
guys.
colors are cheap, so we can do that.
Exactly. Okay, so let's talk about advantages, because in real estate, you want to look for advantages. So some of our advantages as well: design, construction, budget, know-how, history, skills. But what most people don't realize is in real estate, there's a few ways to make money in real estate. Most people make money in real estate. Way number one, they buy real estate and they wait for appreciation. That's how most people invest. I don't like that way. I like to make money in real estate the day I buy, or I like to make money through forced appreciation, which is construction. So we're not out there in Orange County buying houses listed at retail prices. So behind the scenes is the company behind all of our TV shows, and that company is called Tarek Buys Houses. Tarek Buys Houses for the last 15 years has been buying, fixing, and flipping houses all over Southern California, generating thousands and thousands of leads, doing over 1,000 deals. But here's the thing, we can't flip and wholesale all of them, right? So what does that mean when we come across an opportunity that we're like, okay, we can buy this, we can fix up and we can flip it and make a quick 50 grand? Or does it make more sense to buy it, build on it, and keep it and let appreciation take place? So the beautiful thing is the properties that we're sourcing to do this fund, the majority of them are going to be coming from Tarek Buys Houses. And the reason we like that is because in most cases, they're in bad shape. Sellers got to move fast, and we can get them below market value. And that's the key, you guys. Make money when you buy, make money through the construction so you can make money at the end. Because what a lot of people do, and this is where they make a big mistake, is they pay too much for the real estate, and then they pay too much for the construction, and then in the end, there's no meat on the bone. So the goal here is to keep as much meat on the bone for all of us so we can create something special.
Yeah, I want to speak to that just a little bit as well. As I said earlier, like our background in flipping, one of the things that's really shifted for us is the being able to buy that special deal that Tarek's talking about is just the icing on the cake for this, because we get to add so much square footage. And like he said, with that forced appreciation, if we're creating things at a couple $100 a foot that are worth $500, $600, $700 a foot, every square foot that we build adds value to the fund that we create with you.
You know, Jared, that's a very good point, and I know a lot of people have probably missed it because it's so easy, normal for us to understand. But what he's saying is, if we can sell a piece of real estate at $700 a foot, but it only cost us $200 a foot to get it, that's a big return. I mean, that's pretty much what you're saying.
Yep.
And for me and Heather, like, we couldn't develop real estate at $200 a foot. It would be a lot more expensive than that.
Love it. Thanks, guys. Let's talk about the market overview. And obviously, California is experiencing a housing crisis right now. And on top of that, you've got the escalating rents and then the external shocks and natural disasters. Can you elaborate more on that and the opportunity that presents itself in Southern California?
Yeah, and I'll say a few words about that. But like we talk about this all the time. We really do. So, I mean, I've been in real estate since 2003. I survived the Great Recession, and the Great Recession was 2007, 8, 9, 10, trickled into 2011. But I'll never forget what happened. All the builders, all these huge developers all around the country, they went belly up. They went bankrupt. They lost hundreds of millions. Some of them lost billions of dollars. So what happened to the housing in this country? It stopped being built. What happened to the population in this country while the houses stopped being built? Well, it continued to grow. And what happened as more and more people came into the United States? More housing was needed. So what did we have over the last 15 years? We had less houses being built than we've ever seen before. We had more people coming into our country than we've seen in a very long time. So now we're in a position where we have more people than we have housing, and we have a real estate market with interest rates almost at 7%, preventing the majority of people that want to buy to be able to buy. So the demand for renters is so huge right now. And I don't know how many units behind we are. Jared, do you know how many units behind we are in California right now?
I do. So 3.5 million is the latest statistic. And for context on that, there's only 14.5 million units in California. So that means for every 3 houses you see on your street, we need a 4th just to meet the need.
So I want you to think about this. This is Southern California. If you would have asked us 15 years ago if the state would say, hey, you could build condos and apartments in your backyards in Orange County, we would have laughed. They never would have allowed that. And today, they're literally saying, please, if you own real estate in California, please put units there so we can provide housing for our citizens.
But I
And
think like people don't even know that yet.
they don't know. And that's why we're ahead of the game. And that's why this is special that you guys are here with us. That's what I'm saying. This is 20 years of our work and our knowledge. This is our inner circle. And we're sharing this opportunity with you. And the things that we're sharing with you, most of the general public has no idea this is going on. And that's why this is the advantage, right? So like, Jared, tell us more about like some of the housing laws and some of the housing changes you're familiar with, because I know like this is right up your wheelhouse.
Yeah. So, I mean, basically, what happened in the last 3 years is the state of California took away or did away with single family zoning. It doesn't exist anymore in California. So every single family lot now is a multifamily lot. You can add a few more units to it. And depending on what the situation is, sometimes you can add up to 10 units, which is the project that we're working on. And so there's ADU law, which is accessory dwelling units. So that's additional dwellings on an existing single family lot or multifamily lot. Then there's also this duplex law that allows you to do lot splits and create separately sellable duplexes on your property. SB 9, which we use that a lot. And then also there's that 10-unit development law, which has a couple different applications, but basically in a single family zone, if the house is horrible, like the one that we bought, you can rip it down and you can put up 10 units. Or if it's in a multifamily zone and you have, say, 5 or 6 units on it already, you can add 10 more units to it as townhomes or condos. And so those are the few different laws that we use, and there's tons of nuance to them. But that's our team's job, is to understand how each law works. And some of the projects that we do, we use all 3 laws together to achieve the highest density possible.
Yeah, and I'll say this, you guys, this is so new that Jared and his team are going into the cities and fighting with the cities and getting their plans approved because the state has been superseding what the cities want. I mean, they're so ingrained into this. And that's what we're talking about here, you guys, opportunity. Like, just really think about everything he just said. This didn't exist before, and now it does. So this opportunity, it's not going to be here forever, because at some point they're going to say, well, you can't build a bunch of units in your backyard in Orange, California. They're going to go back to the way it used to be. So this opportunity is here with the housing. There's housing on the market right now that needs to be redeveloped. There are so many new laws. We have a specialist with construction. So I'm probably more excited about this real estate venture than I would say anyone we've ever done.
I love it. So just to recap what we've talked about. So the investment strategy is to identify and acquire distressed single family properties, leverage the new ADU laws, and then hold and rent for 3 to 5 or longer years, maximize the investor returns and the appreciation, and all at the same time, you're revitalizing communities and addressing a housing crisis and shortage in Southern California. It sounds like an incredible opportunity.
Yeah. I mean, we're boots on the ground here, you guys. You know, we've been here our entire lives. This is our backyard. And if you've ever thought about investing in real estate or buying real estate, this is one of those opportunities. If you're an accredited investor, you're going to want to jump on because it's literally our life's work, our inner circle, our best partnerships put together to create this triple equity fund.
Love it. Yes. So we went ahead and structured two different classes for you guys. They target two different things that investors seek. One is a straight preferred return, and the other is a preferred return with a profit split on the back end. We're really excited to provide you guys options. Both have a minimum investment of 50K, so the barrier to entry is still affordable. To regress a little bit, to go back just a little bit, Tarek made a good point. You do have to be accredited to qualify. This is a 506c opportunity. There are financial qualifiers that you will have to qualify. You can book a call with me if you have any questions on if you qualify or not. One is a net worth and the second is an annualized income. So please, I'll share a link. I'll drop it in the chat. Schedule a call with me if you have any questions regarding this. So Class A1 is your preferred return only. You're going to expect, or as we would like to say, you can project to receive 10% annualized preferred return. That is accrual. It's not compounding, but it is straight across the board, 10%. It is paid first in our equity stack. The second class, Class A2, is a 6% annualized return, but you get to participate on the profit split. And we made this really awesome for our investors where you guys actually receive 80% of the profit after your 6%. So you get paid in two different ways. One is straight 6% preferred plus 80% upside. And that is until another hurdle is met. And that's once we return 15 to 20% of your capital, we're going to go to a long-term 50-50 hold with you, the limited partner, and with Tarek and Jared and Heather, the limited or the general partners. So that's for the long-term vision. If you have any questions, I'm going to drop not only the book a call link with me, but I'm also going to share with you guys the portal. So you guys can go in, you can view this presentation. You can also submit your soft commit. So if you are ready to at least place a soft commitment, you can go ahead and do so in that portal. And I'm here to walk you through the process every step of the way. So please reach out. I would love to assist you.
Yeah, and today we most likely have, a couple different groups on. One group, accredited investors, you've invested in syndications like this, or funds like this, you've invested in groups. And then there's another group of you on today that have never invested in this type of partnership. And if you haven't, the best way to learn how it works is to actually get started by investing. Because I know a lot of you want to do it, you're looking at these numbers and you're probably a little bit nervous or scared, which makes sense because it can be confusing. So for me, I always tell Heather, I get confused easily. And the way I learn is by doing. So if you're in a position where you're an accredited investor, you have some cash, you want to see how it works, this is your opportunity, because once you actually get in and you start investing with us, you're going to have a clear picture of everything it entails. And guess what? You can continue to do this with us for the rest of our lives because we're not going anywhere. We are looking to build a community of like-minded people that want to partner with us to buy and develop real estate all over this country. And once you're in with us, you're in with us. So today's your shot.
Yeah, we're not going to just leave you without answering questions. So if you guys have questions, we're here to answer. And that's how I learned. It was just asking a lot of questions and soaking things in like a sponge. So I would just be listening to him on calls and going to meetings and listening to webinars and listening to him like on Zoom. So I learned a lot and I just ask questions and take it all in because sometimes it can be overwhelming. And then like you start doing one and you start learning about that. And then you want to do another one, you start learning about that. So it just takes time.
It just takes time. Absolutely.
Yeah, for sure.
Yes.
Yeah.
Jared, can you talk? Go
Sorry,
for
I
it.
stepped on you. Yeah, I mean, thanks for pulling this up. One of the things that I think is really important when you get into something like this is understanding that everything isn't roses. That's part of the reason that we come out in this way to partner up with investors like yourselves, is because as we've gone through the process, we've had bumps and bruises and a lot of wins. And so, I mean, they say that the best performers tend to strike out more than people that maybe are on the lower rungs. And the bottom line is we have had a ton of wins, but it's because we take a lot of swings. And so in that process, we've learned some things that if we, is it possible to pop back? There we go. Thanks,
Sorry.
Kaylee. We had a couple lessons that we learned. And our team's motto is first and fast. And so we have done a lot of that where a law comes out and we just go swinging. Well, in that process, we learned some things about zoning. And there's certain areas that we know you can see, like one of these projects show that they failed. And so fortunately, when you're buying existing real estate, that failure doesn't necessarily have to look like a big loss. It just looks like not the home run that you were expecting to hit. So we learned that public zoning, even though something shows single family on title, does not necessarily mean that that's what applies to the zone. So now we check very specifically every single time when we're buying, what does the title report say? And then also we learned, while you can do projects like this on septic, it's not worth the price of admission. And so we don't do that anymore. And so one of the things that we figured out, though, is in order for us to be very successful at these kinds of developments, we had to fail forward. And so we anticipate fully that there will be more bumps and bruises, but that's our job. Our job is to come in, take the bumps and bruises, and make the largest amount of great decisions that we can through the lessons that we've learned so that people can still have that asymmetrical win without necessarily having to go through all of the pain that we've had to go through.
Yeah, I mean, so really what Jared is saying is he's already got his ass kicked pretty bad over the years. He's learned all of the valuable lessons, just like I did and we did when we first started flipping houses. If you look at season 1 of Flip or Flop, I had no idea what I was doing, right? You look at, the flip off, I can do this in my sleep. Why? I now know what to do because I've already made all the mistakes. So the beautiful thing in life is the one thing you can't replace is experience. So we have so much experience, meaning we know what to do and what not to do. And that's where most people get their hiccup. It's about the decisions you make. So every mistake from the past fuels us to make the right decisions in the future.
Love it.
That's in life.
Sorry for the hiccup, guys. I was trying to pull up the link for you guys to book a call. I did drop that in the chat. So if you have any questions on accreditation or portal access, please schedule a call with me. It's in the chat. All right, let's talk about acquisition criteria. So what are you guys seeing in the market and what is your ideal investment size range? Can you guys elaborate on that?
Yeah, I'll let Jared, why don't you run with this one?
Yeah, so in general, we're trying to pick up stuff in Orange County in the 500 to low $1 million range, where we can add a significant amount of square footage. Now, that's going to be a different mix. Sometimes we can move really fast with 3 units in a backyard. And so that kind of a project, if we find the right fit and it's a good sized lot and sometimes maybe alley access, we're going to pick up something at that lower end of the range, add the 3 units and rents. And then we're going to push forward on deals like the one in Buena Park when we see the opportunity to put 10 units there. So we may rip something down. It takes a bit longer to do it, but the win on the backside is now instead of hundreds of thousands of dollars on one project, now we're talking millions of dollars on that same project. And so it's always just looking at what's in the market, what Tarek's team is pushing at us versus what capital we have available at the time and what we can get rented. And we love to target things when we can where we're getting higher value per square foot and higher rents per square foot. But it's always a matter of pushing into what's available in the market versus what we can create at the time with the resources that we have.
Exactly. So to simplify for you guys is what we do within both teams is every month we have hundreds of opportunities coming across our desk every month, hundreds and hundreds. And we review those hundreds, and of those hundreds, we identify which ones do we want to buy, one. And once we identify the ones we want to buy, we identify what do we want to do to those. So on some, we're like, okay, we can build 4 units. On some, we're like, okay, we can build 10 units. So it's a funnel, but you have to start by generating hundreds of opportunities to find the needle in the haystack, and that's what we're experts at.
All right. Moving forward, let's talk about the first acquisition. Yeah.
So
we're
excited about this one. You guys, okay, you guys don't understand why I'm so excited. This house you're looking at, we already bought it. We own this dirt. It's in the neighborhood I grew up. It's right next to my junior high. It's right next to my first job as a bag boy at Stater Brothers. And this project is so meaningful to me because it's like full circle back home, Buena Park, California. I don't know if you saw my social media. We've been to this property. We walked the property. We shot some videos there. But I am just so excited about this because never would I have thought that we could come in, buy a property like this, and build 10 condos. That those opportunities, they just don't exist unless there's a major problem. And there is a major problem, you guys. We have a housing crisis. And that's what I want you guys to understand. Like, the housing crisis is making these opportunities available. If it wasn't for that, they wouldn't let us do this. And if they didn't let us do this, we wouldn't be able to create this value in real estate. And that's why this opportunity is so special for you guys, because you guys are literally leveraging us, our teams, our inner circle. You're placing your money with our money. We're buying it together. We're building together. We're holding together. We're collecting cash flow together. And you truly are partners. I mean, if you guys want to fly here and go see this property, walk it with me, Heather, and Jared in person, grab lunch. Once you're a partner, you're family to us. You're going to have my cell phone number. You can have anything you want because we believe in our partners and we believe in doing something special. And we have big goals for housing, and we want to create thousands and thousands and thousands of opportunities all over Southern California. And we need partners like you guys to do it. Unless I win the lottery, we don't need you anymore because I can just fund everything. Which I might do that if I do because, you know.
Jared, can you talk about the construction timelines and the milestones that we've got presented here on this screen?
For sure. Yeah. So we're already into the kind of third step of the process right now. So the architects and engineers are dealing on the conceptuals with this. So we've done the soils and gone through the process of getting the survey done. And so now what we need to do is go through the process as we finish up with those pieces. We know how much we're allowed to build on this site. Like the laws specify you're allowed to do 10 units, and they also say what the minimum square footage is that the city can restrict you to. And so what we're going to do, we'll reiterate back and forth with Heather and Tarek and figure out what's the best fit for this. And then we'll go through the process of submitting those plans to the city. The city is under a strict timeline on when they have to respond, how quickly they have to do this. And the cool part about this law is it says that if the city does not respond to us within 60 days, the plans shall be considered approved. And so we love that. And
you guys,
fortunately,
sorry, Jared. I got to say something. You guys, do you hear what he just said? If the city doesn't respond, the plans are approved. I don't know if you saw like Flipping El Musa. The city, sometimes they don't respond for 6 months and they don't care. And you're sitting there waiting for your permits.
Yeah.
They can't do that anymore. That's how serious the state is about housing. Seriously, think about that. It's wild.
Yeah. And, you know, we've had the pleasure or privilege of being a part of that a few times where we've had to force the cities to issue our permits because they did not respond back in time. So anyways, there's a government entity in the state that helps us force the cities to do that part of the process. And so anyways, we'll go through that. We get the plans approved. And then once the plans are approved, we get to start building. And that is going to be between 4 to 6 months in timeline, just depending on our inspectors. And then it's time to get it leased up.
Yeah, absolutely. I want to address something really quick because I saw a comment asking about a crash in real estate. So this is so important for you guys to understand. Do I think there's going to be, or there is an adjustment happening? Yes, absolutely. Do I think it's the best thing we could ask for as investors? Yes, because it's creating all this inventory and all of this opportunity. Is there a chance that retail home prices go down a little bit? Yes, I think so. But that's not the business we're in. We're buying distressed off-market real estate and we're building at a fraction of the cost that others are, and we're creating long-term housing. And here's another reason why we're doing is different, and another reason why the real estate market won't crash, it will adjust. The Great Recession, the reason it crashed so bad, and this is very important you guys understand this, no seller had skin in the game. Every seller bought their house, refinanced, pulled second mortgages, meaning their house was worth 500,000 and they owed 500,000. So what seller is going to fight for a house that they owe 500 on that's worth 300? Not many. What's different about today? Today, owners, sellers have more equity, more cash in their homes than in the history of US real estate. So what does that mean? If there is distress in the market, they're not going to just throw away hundreds of thousands of dollars. They're not going to give it back to the bank. They're going to sell it. And that's where we come in. So if distress comes, it's not going to be a crash, but it's going to be an adjustment. And because there's just no pain in the economy and there's no pain in the housing.
Yeah, I think that a great context for that too is in the business that we are in. Um, I look back to the rentals that I owned at the point that the market crashed, and my rentals didn't go down in rents. Yes, the value of the property went down, but my rent stayed very similar. And so I think that that was a really important factor. And then the other thing is at that time, we created an oversupply based off of speculation. So we built way too many houses. And this is a really important piece of context because in 2006, we built almost 400,000 houses in California that year. Ever since then, the the most houses that we've built in a year is just over 100,000. Like we're building in the 100,000 range when we need 3.5 million units. So we've created this huge demand. And look, I agree with Tarek, the market softening, no question. At the same time, it can't soften into a crash. It's not possible. There's way too much equity in the market. Over 60% of homeowners have at least 50% equity in their home. I mean, 50%, that's wild. So
Yeah.
they sit. They don't
well,
have to move if they don't need to. But more
yeah.
importantly, it doesn't solve the need for housing. We
Yeah.
still need houses. People can trade houses around, but we still have to have houses to live in.
Yeah, and here's the difference. Like after the Great Recession in California, when the market crashed in 2010, you buy a house in Anaheim, California for $260,000. Today, that house is $1 million.
Yeah.
So it's not like they owe 1.2 and the house is worth $1 million. It's worth $1 million. They owe 250.
One of the other fun things that I like to think about in this, though, as well, is you're talking about that $1 million house now. What we get to do is we get to come in and create inventory. These units that we're building, these are sellable units. And so we get to create an inventory that's not being created by the big builders because we get to create these small units that are going to sell in the five, six, $700,000 range on exit. And so we're pushing into workforce housing. When builders are building right now, that's not what they're building. They're building houses for relatively wealthy people. So they're not building to that middle housing need, which is what this niche is. And so we're pushing into a market rate affordable product.
Yeah, and the truth is, the huge builders, they're not going to do what we're doing because they're too big. It makes more sense for them to go buy a zillion acres and go develop thousands of houses versus doing all of this hard work and heavy lifting and dealing with the cities. But that's where the opportunity's created because they don't want to get involved on these headaches. And we love the headaches because for us, headaches means opportunity if you know what you're doing.
Yeah, for sure. Right now, these laws are specifically focused towards small developments. So they're 10 unit and under kind of projects and laws versus what the big builders are doing. They don't operate under these same guides or rules. And you're not going to catch Lennar coming in to do a 10 unit project. That's not happening.
They're too big. They're too big.
All right, guys, we're getting close to closing time. So let's go ahead and give them the next steps to invest and answer a few questions. So all the interested investors, your first step is to make your commitment. So as I was talking about earlier, log into the portal. If you don't have an account already, please register. I'm here to support you. If you have any questions about doing so, I'm here to walk you through the process. The link to book a call with me is in the chat. So if you haven't registered and would like me to walk you through it, book a call with me and we'll get you squared away.
Yeah.
To verify your accreditation, there was a question that came in about verifying accreditation. There are multiple ways to qualify. I talked about this briefly earlier. One is net worth, two is annualized income. There are certain things and recipes that can make up an accreditation qualification. So just call me. Let's walk through it because it might not be a net worth that you qualify for. So anyways, call me. We'll figure it out. And
All
then
right, you
three,
guys.
fund your investment. So let's move forward to some of the questions that we've got coming in. One is, where did it
I
go?
only want easy questions, you guys. Don't give me any hard ones. I'm just kidding.
No
I'm
hard
just kidding. Give
questions,
me the hard
only
ones. I'll
easy
give them to
fun.
Heather.
Okay, so Matthew comes in and he says, are you guys doing split pads or do you recommend it?
Oh, great question. So I think he's talking about pad split. And yes, we are doing pad splits. We are, that's not in California though. We're currently testing that model out in Florida. And if that model goes well, which we're hoping it does, we are absolutely bringing that to California. And that's going to make this opportunity even bigger.
It's really exciting.
Jared, I haven't even told you about some other stuff we might be implementing, but man, it is so exciting.
Cool.
Love it. Okay, let's talk about, this came in previously, and I think it's such a good question. I think a lot of non-California investors have these thoughts. Jared and Tarek, can you go into the eviction process and how you mitigate risk investing in the California real estate?
Sure. Jared, I'll let you run with that one.
Yeah, sounds good. So, look, I know Tarek and Heather invested in a lot of other states. I have invested in 5 or 6 other states as well. I will say that the press is pretty aggressive on us over here in California, talking about how horrible everything is. But the reality is, from a results-driven standpoint, it's not significantly different in my experience. Now, if we have a tenant that's not paying rent, we can serve a 3-day notice, right the day after they're delinquent. If we have to go through to eviction, that does take a little bit of time. We've had it take as long as 4 months. But in general, we're usually able to work it out with the tenants in a way that we don't even need eviction. Our team is very empathetic, but they're also very pragmatic. And so from that perspective, our average deal for non-payment, people are out within a month or two of non-payment. And so it is possible to evict people in California. There were some crazy times during COVID, but outside of that, we have a very good track record of working with tenants to make things work and get them out in a way that's fair and dignified.
Yeah, I mean, listen, you guys, I have rentals all over the country. I mean, it's all pretty damn similar, you know. I mean, I've had hell stories in Charlotte, North Carolina. Bottom line is this: you're always going to hear people talking. You're always going to hear people's opinions. But listen, if someone's giving you an opinion, I want to know the facts behind their opinion, because we're not giving you opinions. We're giving you facts based on what we do all day, every day, boots on the ground. This is where you know me from. You've literally seen our shows. And if you guys know me, if I thought there was a better opportunity somewhere else, don't you think I would go there 100%? So right now is the best opportunity I have ever seen for California because of all the negative press and people getting scared. Let's not forget, we're the 4th largest economy in the world. A state, think about this, a state is the 4th largest economy in the world. Our state is bigger than Japan. We have a housing shortage of millions of people. And guess what? At the end of the day, this is Southern California. So if you believe that for some reason California will not continue on the trend it's been on 10 years from now, then maybe don't invest. But I can tell you this, our weather's probably not changing. The demand's probably not changing. and California land is gold. And I compare my investments in California to almost anywhere else in the country. And you can't even touch what I've been able to do here in California. And I'm going to tell you right now, you guys, my biggest freaking mistake I made. And I'm going to tell all of you, I don't think I've ever told people this.
I know. Do I know?
You
Not
probably
holding
do.
on to.
Yeah, you know exactly what. This is my biggest mistake I made, because I, just like a lot of you, I started listening to the noise and all the experts that didn't know what they were talking about. But I was younger. I stopped buying California rentals in 2015. Why did I stop buying them? Oh, well, you get better cash flow in this state or that state. So what I did is I stopped buying in California and I started buying in other states. And guess what I lost out on? I might have made a couple $100 a month more. I lost millions of dollars in appreciation. Because what? The price more than doubled while I was sitting buying property in states going up 8 to 9%.
You talk to like California natives too, or like older people that like my parents that owned property in Buena Park years ago, back when they were younger, sold it. And now like, oh, we wish we would have held on to that as a rental property, because the amount they bought it for what?
Like nothing.
Less than 100,000, and now it's worth
Million
over
bucks.
a million. Yeah.
Yeah, and that's the truth, you guys. Fourth largest economy in the world. It is California, and this isn't just normal investing. Like, this is like the inner circle stuff. I'm literally using my brand, her brand. We have a full digital marketing team. I spend over $100,000 a month just to generate leads to look at to do this. That's how much we have to spend just to get these leads, you guys. So this isn't something anyone can do. This is a very special process we created, and this is the first time ever we've offered this opportunity to people like you. So here's, you know what? I'll tell you what. Anyone who wants to, you have to do this today, by the way. If you book a call with Kaylee and you said yes, you want to work with TEM and HEM Capital, and you want to be a part of this project, two things. One, I'm going to send you a signed copy of my book, Flip Your Life. It's a lot of fun. But number two, you are invited to meet with us in person, go to this property we showed you in Buena Park, and actually see the property that your money's invested in. You can hang out with us, have lunch with us, talk real estate with us. And the only requirement is being excited about being an investor with us. So if you want to partner with us, here's your chance, you guys. Here's the book. Even Heather.
Wait, do I get one too?
No, it's $5 for you, Jared. you guys get one.
Hey,
I'll sign it too if you want me to.
Oh yeah, of course. They don't even care about me. They care about you anyways.
You know, it's funny, Tarek, that you say that about investing out of state. Same thing, 2016. I bought 16 fourplexes in Vegas. And look, hey, made money, fine. But I look at those today. Fortunately, I've exited them, but I look at those today versus the other investments that I made and held in California. I mean, it's just not the same. Night and day.
Yeah, and if you don't believe us, go on this thing called the internet. Ask the internet all the questions you want about California and appreciation, and the internet will tell you the truth.
Or ChatGPT.
Yeah.
ChatGPT too. But seriously, I'm serious, you guys. Instead of get hard facts. How much has Orange County real estate appreciated since 2000, and how much has Houston since, like, just do the math. You'll see it.
Yep. Cool.
Question in for Tarek and Heather. It's a question and a statement. So this person, it looks like his name is Victor Iaios. They had the pleasure of meeting you at Chalk, Gwen Stefani's concert. Great to see you here again. For the project like Buena Park, what is the time frame from time in to completion? Great question. And Jared, maybe you can step in to help the construction process.
Yep.
Well, we already own the property, and so Jared, I'll let you. Yeah,
that's a big step to already own it.
Yeah, we already started.
Yeah, I mean, on the low side for the bigger developments, it's going to be around 18 months. And on the high side, if we get a lot of pushback from the city and they make things a little bit slower, it can be in the 2-year range, which still is about twice as fast as the normal development cycle for a product like that. So it's kind of cool because this product is not a new product. It's just done in a new way where the cities don't have as much pushback and control as they've had previously. So it can be as low as, 60% of the normal timeline, or, as fast as a third of the timeline.
Yeah, no bullshit, you guys. That's why Jared's here. I mean, he's an expert at construction. He's an expert at working with the cities. He's an expert at pushing things through. And if I was as good as him, I probably wouldn't have you here, Jared. But I'm not. You are an expert, and that's why you're here.
Next question. We're running out of time, so we have a couple more questions. Buena Park investment. What are the market value rents for new construction for 1, 2, and 3 bedroom and bath units?
Yeah, I mean, that's a great question. And I will say with rents and values, there's diminishing returns for additional square footage. So basically, if we go towards that 3-bedroom model, the rents are in the 250, 260 square foot range. If we go into the smaller models, you're looking between 3 and 350 a foot in rents. And then as far as values are concerned, between the high 4s and low 6s, hundreds of dollars per square foot in values for every additional square footage or square foot that we create. And so basically, the smaller the unit, the higher price that we're getting in rents per square foot and values per square foot, because that's the barrier to entry for people to survive and have a roof over their head here in California.
Yeah. And a lot of people, they're building at $500 a foot, and it's worth $500 a foot. Our goal is to build at $200 a foot, and it'll be worth $500 a foot, and that's where you make the money.
Yep.
One more question before we run out of time, and this comes from Gurpal. Gurpal wants to know, how soon do investors see returns upon funding? And this is a question I can answer unless you guys want to take it.
We want you to take it.
Okay, I'll step in. So I'm going to backtrack and say this is a $10 million fund. This is what's considered a blind pool offering. What that means for you investors is we don't typically have an asset to talk about in a blind pool offering. Normally it's the opposite. We talk about the team, we talk about the business plan, and we talk about how we're going to execute upon that business plan. It just so happens this business plan is so strong that the property came before the capital raising really took off. So, I mean, it's really a good proof of concept. However, when we talk about returns, let's talk about the type of property that came in at first. This one is a full demo, and it's going to be new construction. So we're going to have kind of a lull, at least with this first property that goes into this $10 million fund. Now it's going to depend on asset number 2, 3, 4, and the next properties that we purchase that are going to balance this out. And it could be that the second property is a construction. We're not quite sure what the market is going to present to us, but we're really hopeful that we're going to blend it with multiple different kinds of properties that will truly allow us to put an ADU on the property. That way we're able to return an investor distribution sooner than you would from a ground up construction aspect. Any additions to those, guys? Okay.
No, it's great. It's great. You know, I honestly, I think about myself a lot, you guys, in my real estate journey. And the truth is, I'm self-taught when it comes to real estate. And if I was sitting on a webinar like this today and listening to everything we said, I'd probably be pretty confused. So if I were to simplify what we're doing, I would say it like this. The fact we've been on TV a long time makes it that people know who we are. Because of that, we do marketing to people all over Southern California that might be interested in selling. If they are interested in selling and their house needs some work and they've seen our shows, they call my offices. We look at the property, and if we negotiate a good price, we buy it. And then from there, instead of flipping it, we add on to it, and then we rent it out. And that's simplifying everything we talked about today. And here's your chance to do it with us.
We would be honored, guys. So book your call with me, register in the portal. Let's walk you through the process. Here to support you. Look forward to talking to you all. Thanks for joining us today.
Yes, thanks, Kaylee. Thanks, Jared.
Thank
And don't forget Sign Book. And anyone who decides to book a call, invest with us today, you can come meet us live and in person, walk this property, take some notes, have some lunch, and of course, hang out.
Bye, guys.